All right, welcome back, everyone. It feels good to have the crypto science portion of the show back.
Yeah.
We're diving into Morpho today, and honestly, this one's got me a little hyped.
Oh, yeah.
Imagine a world where your DeFi yields aren't just good, they're optimized. Morpho might be the key.
It's definitely shaking things up. To understand why, let's start with the DeFi lending landscape as it stands. Most folks are familiar with the big names, your AAVEs and Compounds.
Yeah.
They work on the principle of lending pools. Throw your money in, borrowers take from the same pool, and interest rates fluctuate based on supply and demand.
Right. It's been the standard for a while.
Yeah.
But it always felt like there was some inefficiency baked in. Like, as a lender,
Yeah.
I'm sharing the interest pie with a bunch of other folks.
Yeah.
Even if only a handful of borrowers are actually taking loans.
That's the catch with traditional pools. You've got the spread between the supply APY, what you earn as a lender, and the borrow APY, what someone pays for the loan.
Right.
Often, that spread means lenders are dividing the interest paid by a smaller group of borrowers. Not exactly ideal.
Okay, so how does Morpho tackle this? Give us the magic solution.
Morpho adds a layer of peer-to-peer or P2P connections on top of those existing pools. So now, instead of just blindly tossing your money into the big pot, there's the potential to directly connect with a borrower.
So I'm cutting out the middleman, essentially.
Yeah, exactly.
Does that mean I, as the lender, score a better return?
Exactly. Morpho introduces this concept of P2P APY. Think of it as a rate that sits right between the regular supply and borrow APYs. If you, the lender, get matched directly with a borrower, you both benefit from this sweet spot rate. It's a win-win situation.
All right, that makes sense. But DeFi can be a wild ride. What happens if my perfectly matched borrower suddenly disappears? Or the market takes a nosedive? Am I just out of luck?
That's where Morpho's fallback mechanism comes in. If a P2P match breaks for any reason, a borrower defaults. The market goes haywire, you automatically revert back to the rates of the underlying pool. It's like having a safety net built right in.
That's reassuring. You're not completely abandoning the security of those established pools. But it still feels like Morpho is stepping outside the traditional DeFi playbook. They're really pushing the boundaries.
Yeah.
Especially with this whole permissionless market creation thing. Break that down for me. What does that even mean?
Think of it like this. In most DeFi platforms, listing a new asset or creating a new lending product usually requires a ton of governance hurdles, approvals, the whole shebang. Morpho flips the script. It's truly permissionless. Anyone can create their own lending market. All you need to do is define a few key parameters. Collateral asset, the loan asset, the maximum loan-to-value ratio, the oracle used for pricing, and the interest rate model.
Hold on, so you're telling me I can stroll into Morpho and create a market where people can borrow against their staked Ethereum and use that to borrow some other more obscure token.
Precisely. And what's remarkable is the immutability of it all. Once you set those parameters, they're locked in. They're not subject to sudden changes from governance votes or anything like that. That market exists, and those rules stay fixed, offering a level of certainty you rarely see in DeFi.
Okay, I'm starting to see why people are excited about this. But with potentially hundreds of these custom markets popping up, how do we even keep track of them all? It can't be a free-for-all naming convention, right?
It's actually quite logical. Let's use your staked Ethereum example.
Yeah.
You want folks to borrow against their staked ETH. We'll call it root stuff. To borrow regular ETH with, you set a maximum loan-to-value ratio of, say 94.5%. Use Chainlink's Oracle to feed in price data, and choose Morpho's standard interest rate model, which is called the adaptive curve ARM. Your market would be neatly labeled REST-WEFF, 94.5% Chainlink or adaptive curve ARM.
All right, so it's like a little info tag that tells you exactly what's going on in that specific market. Makes sense. I assume each one also gets its own unique ID, just in case.
Of course. Each market has a unique identifier based on a hash of all those parameters. You can think of it as a digital fingerprint, ensuring you're interacting with the exact market you intended.
This is a lot to digest, but it feels like Morpho is ushering in a whole new era for DeFi lending. It's more than just rates. It's about control, specialization, maybe even a whole new wave of users and assets entering the space.
What's fascinating is that this open source approach, where anyone can build upon or modify the protocol, fuels a level of innovation we haven't really seen before.
So it's not just about Morpho itself. but the entire ecosystem it enables.
Exactly. And that's a huge win for anyone participating in the DeFi space. That means the tools and opportunities are constantly evolving and improving, driven by the contributions of a vibrant community. It's like we're moving from a world of standardized financial products to one where you can tailor-make your own, all thanks to the transparency and flexibility of blockchain technology.
That's a powerful idea. But let's get back to those market parameters for a second. Let's say I'm feeling a little reckless and decide to create a market with a sky-high loan-to-value ratio, like 98%. Isn't that a recipe for disaster? Wouldn't even the slightest dip in the collateral price trigger a cascade of liquidations?
That's a smart question, and it highlights the importance of carefully balancing risk and reward when setting up these markets. A higher LTV does mean greater leverage for borrowers, but it also exposes them to a much higher liquidation risk.
So as the market creator, I'm essentially walking a tightrope. Do I prioritize security and keep that LTV low? Or do I tempt fate and offer borrowers a chance to maximize their leverage, knowing the potential consequences?
Precisely. You have to weigh those factors. And it really comes down to understanding the assets involved, the overall market conditions, and even the risk appetite of the people who might participate in your market. Morpho gives you the tools to make those choices, but the responsibility ultimately lies with you to use them wisely.
And that responsibility extends to understanding some of those technical terms we've been throwing around. Earlier, we mentioned this adaptive curve RM thing, which, if I'm being honest, sounds a little intimidating.
Yeah.
Can we break that down a bit? What exactly is an interest rate model, and why is it so important?
Absolutely. The interest rate model is the mathematical engine that determines how interest rates fluctuate within a Morpho market. It takes into account things like supply and demand, utilization rates, basically, how much of the available assets are being borrowed, and spits out the interest rates for both lenders and borrowers.
So it's like the algorithm that keeps the whole system running smoothly, ensuring that rates stay balanced and reflect the actual market conditions.
Exactly. Now, Morpho currently uses this model called the adaptive curve IRM, which is designed to be, well, adaptive. It adjusts interest rates dynamically based on real-time market data. This helps to keep rates competitive and ensure that both lenders and borrowers are getting a fair deal.
Okay, that makes a lot more sense now. It's not just about picking random numbers. There's a whole science behind it.
Right.
But it also makes me wonder, who's actually building these markets? Is it mostly hardcore developers?
Right.
Or are we seeing regular folks getting in on the action?
It's a fascinating mix, actually. On one hand, you've got developers who are building really sophisticated strategies and creating markets that cater to very specific niches. But what's really exciting is that Morpho's accessibility is attracting everyday users who are starting to experiment and build markets that might serve their own communities or address specific needs.
It really speaks to that whole ethos of decentralization, right? Putting the power back into the hands of the people, not just institutions or big tech companies. But can you give us some real-world examples? What are some of the more innovative or unexpected Morpho markets that have popped up?
One that really caught my eye allows users to borrow against their NFT holdings. Think about that for a second. NFTs, traditionally seen as these illiquid assets that you either hold or sell, can now be used as collateral to access liquidity. It's a game changer for the NFT space.
Hold on. So I could theoretically take my prized CryptoPunk, lock it up as collateral in one of these Morpho markets, and borrow, say, ETH or stablecoins against it.
Exactly. It unlocks a whole new level of utility for NFTs. You can access liquidity without having to part with your precious digital art. You can use those borrowed funds to invest in other opportunities, cover expenses, or even just participate in other DeFi protocols. It's a brilliant way to bridge the gap between the traditional art world and the fast-paced world of decentralized finance.
That's mind-blowing. It really shows how Morpho isn't just about optimizing existing DeFi markets, but about creating entirely new ones, unlocking value in places we never even thought possible.
Right.
Are there any other examples that have you particularly excited?
Another fascinating example is a market that's focused on real-world assets. We're talking about tokenized representations of things like real estate, commodities, even intellectual property. These assets, which have traditionally been difficult to trade or fractionalize, can now be brought into the DeFi ecosystem, creating entirely new lending and borrowing opportunities.
This is starting to feel like we're on the verge of a major paradigm shift. Imagine being able to get a loan against your house or your business inventory without ever setting foot in a bank. It's a whole new level of financial freedom and accessibility.
It is, and while it's still early days for real-world assets on DeFi, the potential is immense. Morpho is creating the infrastructure to make this vision a reality.
Okay, I have to ask, and maybe this is a bit naive, but we're talking about real-world assets, physical things, existing on this digital, decentralized platform. How do you even ensure that these tokens actually represent what they claim to? What's stopping someone from creating a token that supposedly represents a house that doesn't even exist?
That's where the concept of oracles comes in. Remember how we talked about defining an oracle as one of the key parameters when creating a Morpho market? Oracles are essentially trusted data feeds that bridge the gap between the blockchain and the real world. They provide verifiable information about the assets backing these tokens.
So if I create a market for tokenized real estate, I need to specify an oracle that can provide accurate and trustworthy data about the properties backing those tokens.
Exactly. The oracle acts as a source of truth, ensuring that the tokens being used as collateral actually represent real-world value. It's a crucial component of bringing these assets onto the blockchain in a secure and transparent manner.
That's a crucial piece of the puzzle. It's like having a digital notary verifying the authenticity of these assets. But even with oracles in place, the whole concept of real-world assets on DeFi feels like uncharted territory. Are there any specific challenges or concerns that you're keeping an eye on as this space develops?
One of the biggest challenges is regulatory uncertainty. Bringing real-world assets onto the blockchain raises a whole host of legal and compliance issues that haven't been fully addressed. Navigating this regulatory landscape will be crucial for the long-term success of this sector.
That makes sense. It's like trying to fit a square peg into a round hole. You've got this innovative, decentralized technology trying to integrate with a very traditional, often centralized legal system. It's bound to create some friction.
Absolutely. And another challenge is ensuring the security and reliability of these oracle systems. Remember, oracles are a potential point of failure. If an oracle is compromised or provides inaccurate data, it could have cascading consequences for the entire market.
So it's not just about building the technology, it's about building trust and ensuring the integrity of the data that underpins the entire system.
Precisely. And that requires collaboration, transparency, and a commitment to security from all stakeholders involved.
It sounds like we're still in the early stages of this real-world asset revolution, but the potential is definitely there. But let's shift gears a bit and talk about the people actually creating and using these markets. Who are they? What are their motivations?
It's a diverse group, and their motivations vary widely. Some are driven by the potential for profit, seeking to capitalize on the arbitrage opportunities that arise in these nascent markets. Others are more idealistic, drawn to the vision of a more inclusive and accessible financial system.
It's like the Wild West of finance, right?
Yeah.
You've got your gold prospectors seeking quick riches, but you've also got your pioneers and settlers who are building the infrastructure for a new society.
That's a great analogy. And it's that combination of profit-driven innovation and community-driven development that makes this space so dynamic and exciting.
It's the perfect blend of idealism and pragmatism. But let's not forget that Morpho itself is built on this foundation of open source development. Can you elaborate on that a bit? What does it actually mean for the users and the wider ecosystem?
Open source means that the code behind Morpho is publicly available for anyone to view, audit, and even modify. This fosters a level of transparency and accountability that's rare in the traditional financial world. It allows anyone to verify the security of the code, identify potential vulnerabilities, and even propose improvements.
So it's like a giant public forum where anyone can contribute to the development and security of the protocol.
Exactly. And that's a huge benefit for users. You're not relying on a single company or a small team of developers to maintain the security and integrity of the system. You have a global community of experts constantly scrutinizing the code, identifying potential issues, and working together to make the protocol more robust.
It's like a self-healing system.
Yeah.
Constantly evolving and improving thanks to the collective intelligence of the community.
Right.
But does this open source approach also extend to the creation of new markets? Can anyone contribute to the code that underpins these custom markets?
Absolutely. Morpho provides the core infrastructure and the tools. But the community is free to build upon it, creating new features, functionalities, and even entirely new types of markets.
It's like giving people the building blocks and letting their imagination run wild.
Yeah.
And that's what makes me so optimistic about the future of Morpho. It's not just a protocol. It's a movement. It's a community of builders and innovators who are pushing the boundaries of what's possible in decentralized finance.
I couldn't agree more. And I think this is just the beginning. As more people discover the power and flexibility of Morpho, we're going to see an explosion of creativity and innovation.
It's like planting a seed and watching it grow into a vibrant ecosystem. And who knows what amazing fruits it will bear in the years to come. But with all this talk of potential and excitement, let's not forget that DeFi, by its very nature, comes with inherent risks. In the next part of our deep dive, we'll explore some of the challenges and potential pitfalls that users need to be aware of. Welcome back to the show. We've spent the last 2 parts of this deep dive unpacking Morpho. And it's clear this protocol is doing some really innovative things in DeFi lending. But before anyone rushes off to create their own NFT-backed loan market, we need to talk about the flip side of the coin, risk. Every innovation comes with its own set of challenges, and Morpho is no exception.
You're absolutely right. It's crucial to approach any DeFi protocol, no matter how promising. With a healthy dose of caution, let's face it, we're still in the early days of this technology.
So let's break it down. What are some of the specific risks that Morpho users need to be aware of?
One of the biggest concerns, as with many DeFi protocols, is smart contract risk. Morpho's code, while it's been audited and reviewed, is still susceptible to bugs or vulnerabilities. And a smart contract exploit could lead to significant financial losses for users.
That's a risk that seems to loom over the entire DeFi space. It's a constant reminder that this technology, while powerful, is still under development. And there's always the potential for things to go wrong.
Exactly. And another risk that's inherent to any lending platform, especially in the volatile world of crypto, is market risk. Prices can fluctuate wildly. And even with Morpho's fallback mechanism, a sudden drop in the value of your collateral could trigger a liquidation.
Which brings us back to those loan-to-value ratios we talked about earlier. If you're borrowing against your assets, it's crucial to choose a conservative LTV to give yourself a buffer in case the market moves against you.
Absolutely. Managing risk in DeFi is all about understanding those parameters and choosing settings that align with your own risk tolerance. Morpho gives you the tools, but it's up to the individual user to wield them responsibly.
So I've got smart contract risk, market risk. Those are the big ones that tend to make headlines. Are there any other potential risks or challenges specific to Morpho's approach that we should highlight?
One challenge that I think is worth considering is the potential for fragmentation. With this permissionless market creation, we could end up with hundreds, maybe even thousands, of specialized Morpho markets, each with its own liquidity pool and set of parameters.
I can see where that could become an issue. On the one hand, it's amazing to have this level of customization and choice. But on the other hand, too much fragmentation could make it difficult for users to find the best rates or the deepest liquidity.
Exactly. It's a trade-off. And this is where the community plays a crucial role, building tools and interfaces that aggregate data from these different markets. Making it easier for users to compare rates and assess liquidity will be essential.
So it's almost like we need a layer of organization built on top of this decentralized, permissionless system, a way to bring some order to the potential chaos.
Precisely. And I think we'll see a lot of innovation in this area. User-friendly interfaces, aggregators, maybe even AI-powered tools that help people navigate this increasingly complex DeFi landscape.
It's a lot to wrap your head around. And it highlights the importance of education and awareness. Users need to do their own research, understand the risks involved, and make informed decisions. That's something we always try to emphasize here on the Deep Dive.
I couldn't agree more. Knowledge is power, especially in a space as dynamic and rapidly evolving as DeFi.
But let's zoom out for a moment and look at the bigger picture. Morpho's emergence tells us something about where DeFi is heading as a whole, don't you think?
Absolutely. Morpho embodies this broader trend toward customization, specialization, and user control. It's like we're moving away from the one-size-fits-all approach of traditional finance and embracing a more modular, Lego-like system.
Where you can pick and choose the building blocks that suit your specific needs and create something truly unique.
Exactly. And I think this is just the beginning. As more people enter the DeFi space and demand more tailored solutions, we're going to see even more protocols like Morpho emerge, pushing the boundaries of what's possible.
It's both exciting and a little daunting. We're witnessing the birth of a new financial system. And while it comes with risks, the potential for positive change is undeniable.
I completely agree. And for anyone listening who's intrigued by Morpho or DeFi in general, my advice is to dive in, explore, experiment, but always do your research and understand the risks involved.
That's a great note to end on. It's been a fascinating journey exploring the intricacies of Morpho. And I hope our listeners feel equipped to embark on their own DeFi adventures. Just remember, the future of finance is in your hands.